right, this is the last objective for Chapter 1, Objective 1.6, Evaluate Business Decisions Ethically. Um, the book talks about that, and I'll talk about it a little bit, but I really wanted to speak about the profession, accounting profession, and its particular ethics. Um, of course, should be of interest for those of you who want to be accountants, but also if you're not an accountant, you need to understand the role of the accounting profession in business enterprises. Now, your book and others talks about economic versus legal versus ethical. You're going to make a decision for economic reasons, and sometimes those forces give you an incentive to violate not only ethical guidelines but also legal guidelines. And there's many cases of that, cases of embezzlement, corporate fraud, and so on. The legal aspect, especially in a large corporation, you'll have lawyers who tell you the legal guidelines. But you can have something that's a good economic decision, a good legal decision, but still not ethical. Okay, so a decision could be both economically and legally viable, but not ethical. So, we can talk about business ethics versus ethics. And there is a lot of that where broader ethics are being brought into the corporate structure. For example, there's a movement towards sustainability and what's the ethical role of businesses in helping to protect the environment and whatnot. But aside from that, what I'm really focusing on, not that those aren't important issues, I'm focusing on business ethics as a day-to-day practice, day-to-day decision making in the accounting profession versus general business responsibility. So, something in general business ethics may be okay, but it may violate the accounting profession ethics. So, accounting profession ethics are another layer of ethics. If you go to your physician, they have a profession that requires that they have a certain level or standard of care. They don't make a decision based upon whether or not they need to make a bill payment. They have to act in accordance with the profession. So any profession acts in accordance with its professional standards. So an accounting firm, here's a little example. Say an accounting firm client, the CEO, insists that an audit decision by your audit team is incorrect and they threaten to leave your firm. Your team is confident that the treatment would violate GAAP. Now, an accountant can try to talk to the CEO and calm them down, but changing the accounting would be a violation of professional standards. And even if you think you would make more money if you did what the CEO said as an auditor, you would be violating GAAP and the standards of your profession. So, if you're a CPA in or out of a corporation, you have a duty to record transactions in compliance in accordance with GAAP. So that's a professional standard of care. All right, and why is this important? Accountants, all they do is produce information and interpret information, financial information, and business information. So accountants take words and make them numbers, take numbers and interpret them back as words to explain to accountants and non-accountants. For the information to be useful, there has to be some trust. You have to have a reputation, and those professional standards and all the governance around them makes the information useful, and it's what makes our capital markets in the U.S. and around the world function. So if you're going to be an accountant, absolutely, you have to maintain an even higher standard of your profession. If you're not going to be an accountant, know that if you hire, and this only applies really to CPAs, there are other designations. I'm talking primarily about CPAs who do audits. That they have these professional ethics, and you ought to rely on them to produce financial statements in accordance with GAAP. So that's that's my major message to you, accountants and non-accountants, that the CPA has a special role to play in corporations in producing the financial information.